you got 20-point knock as far as the Nifty is concerned. The Sensex is off 57 points in terms of trade. So the recovery has been there. And I suspect that most of that recovery is actually coming from the technology space, not Infosys Technologies, but the other stocks really which are doing most of the talking right now. Okay, let me welcome in a special guest right now. Harendra Kumar joins us to talk more about his view as far as the market is concerned. He, of course, is head of research at Centrum Broking. Harendra, thanks for joining us. Prashant here. What do you make of the market right now, and what is the advice going out to your clients at Centrum?
See, markets clearly in a range for at least for the next 3 to 4 months, till the whole tightening process plays out. So at this point of time, it's more of a trader's market.
What's the range that you expect the market to be in? 4250, 4200 on the downside. Do you think that will hold?
No, I think it's a little lower from there, because that's where we could test the bottoms probably in the next quarter going ahead. So somewhere around 3,800 and anywhere to 4,800, and that's a trading range that we're looking at.
Harendra, technology is a space. How does it look to you? Rupee depreciation will perhaps play out in a significant manner on earnings for most of these companies. The currency cross against the dollar has been at about 42. The currency right now, the rupee against the dollar is at close to about 44. So it's going to be significant.
Actually, it depends upon how each of these companies have hedged their revenues going forward. But yes, what it does is, it gives them enough space for them to, tighten their employee base, and improve margins. So I think for the next 6-8 months, if this trend continues, IT companies will benefit in terms of competitiveness.
Infosys Technologies, Harendra, what's your call? They've done an acquisition yesterday.
Prashant, clearly, I think if you have to go to the next orbit, consulting is the space to be in. And Infosys was finding it a little difficult over the last 2 years to make a breakthrough in this. So, more than a EPS accretive kind of a scenario, we're looking at it in terms of the synergy or the leg up that the company is going to get going forward in this vertical. And clearly, I think from here on, Indian businesses had to evolve, and Infosys has taken its first step towards that. I think consulting as well as offshoring benefits from this space will play out over the next 2 years. So I think it's not for the short term, and I think clearly some positive optimism on the IT front that yes, Indian business are going to look at the new trajectory, and Infi as a leader has done that.
Harendra, what do you make of the move as far as the banking space goes? Banking stocks particularly have been very, very wild in the movement over the past couple of weeks now, leading the rally on the upside and also breaking down the first whenever the market starts to break down. So in that sense, it's been a very high beta sort of a space. Anything you like in that particular space?
See, two things. Our interactions with the bank managements have told us one thing is credit growth is going to be around 20%, which is quite robust. Yes, the retail space is seeing a deceleration, and that's where the NPA problem will also play out. So you've got to look at wholesale banks and credit, and those who are beaten down significantly, probably a Yes Bank, or banks where retail exposure was lower. Interest rate tightening is going to play out over the next 2-3 months, so we don't see them outperforming in a big way. But yes, they're going to grow reasonably, and you've got to wait it out for the next 8 months before the next up move begins.
Particularly ICICI Bank, what's your call there?
See, I think we got to see, because there's a lot of internal restructuring that's happening at this point of time. The realignment from the retail to the wholesale business, plus how the NPA things plays out. First quarter was pretty good, but I think some stresses will be seen in Q2. So it's still wait and watch there.
Harendra, talk a little bit about the oil and gas space, RIL and Reliance Petroleum in particular. In our interaction with a lot of analysts that we speak to from that space, most of them are telling us that there could be a little bit of a run-up, and a meaningful run-up at that, in both these stocks ahead of the events which are lined up. There is a refinery which is scheduled to start. Before that, there is the first gas out of KG-D6. Do you think that's possible?
See, we don't know, we don't track the space closely, but yes, all this has been priced into the sum of the part that's been built into Reliance Industries. So yes, in terms of sentiment, it will be a slight booster, but otherwise I think prices, most analysts have factored the upside from both these events.
Harendra, what do you suggest investors do? Medium, not very near-term or trading mentality investors, but medium-term, reasonably long-term investors do at this point in time, because a lot of people who had actually made quite a bit of money by investing into banking stocks from the lowest points in the market have actually seen some of those gains getting chipped away. Should they move a little bit of that money into defensives once again, rather than be in banking and a couple of the other high beta spaces, or do you think hold on to your positions?
No, actually not. I think it's a time to realign your portfolios to the economic realities currently, and because we don't know how long this economic reality is going to pan out. So clearly, FMCG, pharma, technology are the spaces to be in, and more stock specific, or who are insulated from the tightening and the industrial slowdown.
Harendra, foreign investors have been very, very fickle about this market for the past, I think, 15, 20 odd sessions now. Consistent sellers of close to 150, 200 crores might not be very much on a daily basis, but consolidated, it's a big figure out there, and it shows on the price of the market right now. When do you think that particular figure starts to change? Because it still remains the largest category of investors in the market.
Yes, I think they are going to wait and watch for the next 6 to 8 months, but we are confident that monies will return into the markets sooner than later. I think one is inflation and other is some amount of stability on the rupee front. I think probably if we have a view that 44 is going to be the bottom, and from here on we're going to see upward trajectory, that's where the confidence is going to return. But again, that has a play on the economy as well. So I think next 6 to 8 months we're going to be in this range, and probably from there on we're going to see the rupee moving up and monies returning.
Do you think the majority of the market is still skeptical about the fact that 4,000, 4,200 odd might be the bottom, and not really believing that? Do you think that's the case?
No, I think more or less the markets have priced in a lot of negatives, and I think they'll wait and watch for the Q2. And if that is contra to their fears, I think we could see some amount of optimism returning into the market.
Fair enough. So majority believing that perhaps that's going to be the bottom for this market, that the market's already tested the kind of bottom we're talking about, but still skeptical about an up move or a breakout. Harendra, is it possible that the market gives you 20% plus sort of rallies over the next 6 to 8 months, because that's how long you're saying the foreign investors will start to be believers again in the Indian story? So do you think it's possible to play these 10%, 15%, 20% sort of up moves in the near term, in those particular months, 6 to 8 months?
It's a little difficult is because I think rather than more sectoral rallies, we are seeing some amount of consolidation in stocks, and some leaders emerging and weaker players getting out. So it's a little difficult. It gets a little dicey. So I don't see secularly institutions making money there.
Harendra, if you had to stick to perhaps, for someone who actually was sitting on a lot of cash, is this going to be the right time to get into the market, or do you think stay on the sidelines stay for a little bit more time, get the market to see a little bit more of stability, and then enter the market for a fresh investor, for somebody who taken all the money out of this market?
See, Prashant, I think one thing is very clear is that Indian markets have traded around 15 multiples. That is our historical average, and anywhere we've gone lower than that, probably 13 times or 14 times, been for a very brief period. So I think closer to 12,700, 13,000, we should see a bottom, and buying should re-emerge again. So we are not far away from there. Yes, and I think over the next 6 months you should start accumulating wherever there is value.
All right, Harendra, thanks for that. From me here on Opening Moves. Thanks for watching. Fundamentals with Ira is coming right up.